the Asian Development Bank has released a report on the evolving climate risk in Asia and Pacific region. So they say that with the policies currently being implemented, around 3 degrees Celsius of warming is expected within this century. So while the pledges in nationally determined contributions could reduce this to 2.4 degrees Celsius, taking into account feedback effects implies that warming could happen faster than conventionally estimated. So they say that developing Asia both suffers from and contributions to the climate crisis. The emissions intensity of the region's economy has decreased by over 50% since 2000. However, the region still generated about half of global greenhouse gas emissions in 2021, driven by rising domestic consumption and energy demand production. Without stronger adaptation and mitigation efforts, the region faces severe impacts and economic losses. They say that the destructive power of typhoons and cyclones will double and flood losses will increase due to more concentrated rainfall and glacial melt. So the report also says that the climate dependent sectors such as agriculture, forestry, fisheries will face a diminished output. So the hotter temperatures will reduce labor productivity, erode human and social capital, and increase mortality and health risk. They also says that the climate change reduces gross domestic product, that is GDP, in the region by 17% in 2070 under high-end emission scenario. So the sea level rise is a major threat, and the labor productivity effects dominate the losses, with relative effects concentrated in lower income and fragile economies. So particularly the coastal population will be affected. The impacts are regressive and hit vulnerable, and it will hit the poor people the hardest. So the public concern about the climate change is high, as is support for ambitious climate action. So the ADB Climate Change Perception Survey conducted in 2024 finds that 91% of respondents in 14 economies view climate change as a serious problem. Improving policy design, addressing inequalities, and increasing awareness about the climate action can boost the public support. So they also stated that accelerating climate change is the key to address. They wanted a policy to address all these large impacts. So the term only adaptation can alter the climate change losses. So effective adaptation policy must address both slow onset changes and greater frequency and or intensity or fast onset extreme events, while at the same time considering other development needs. So the early and coordinated investments are needed to avoid damage and enable the transformational response. Market reforms can enhance adaptive capacity by correcting market distortions. The report also says that both public and private sources are the key to closing adaptation financing gap. They also state that annual financing needs for adaptation in the region are estimated to be between $1.2 billion and $431 billion. Nearly half of model needs are for coastal and river flood protection. The need for exceed approximately 34 billion of tracked adaptation finance that was committed in the region 2021 to 2022. So the continuous reassessment of climate change impacts and adaptation actions is very essential. The results of this ongoing reassessment must be communicated continuously to ensure that climate risks are internalized in planning and investment process. Scaling up private climate capital. The report says that private capital is increasingly becoming a source of climate finance, but more needs to be done. The report also says that greater policy certainty and financial sector reform can attract private climate capital. Governments can adopt a comprehensive set of aligned policies featuring a mix of price and non-price policies such as carbon pricing and clean energy subsidies to enhance profitability of climate investments and provide consistent incentives. Policymakers can develop climate-oriented financial systems to reduce transaction cost and compliance risk for investors. The report also says that public sector can help overcome barriers to private climate investment. So the solutions like blended finance can facilitate the use of de-risking instruments such as first loss guarantees, insurance, credit enhancement to attract private investors. The report also states that carbon pricing for most cost-effective mitigation. So the carbon pricing instruments are gaining momentum in this region. 8 national initiatives are currently being implemented, while 3 countries are considering a domestic emissions trading system. However, these efforts are challenged by continued significant financial support for fossil fuel subsidies. Carbon tax is not only an efficient approach to reduce emissions, but also raise significant revenues that could be redirected to the highest value public uses. Existing studies suggest that adverse impact of a carbon tax on growth, inflation, overall employment is likely to be small. Furthermore, policymakers have options to make distributional effects more progressive, including through targeted transfers, anti-poverty programs, or reducing regressive taxes. The report also states that efficiency-based targets balance emission reduction and production expansion goals but may not reduce emissions sufficiently. Institutional and regulatory frameworks as well as monitoring, reporting, verification systems are critical. Developing economies can leverage international carbon markets to meet climate goals. So purchasing credits can help meet NDCs, especially when domestic abatement costs are high. However, developing national carbon market strategies is essential for effective engagement with international markets, effective NDC accounting frameworks, and voluntary market participation. Addressing the climate crisis in Asia and Pacific states that global greenhouse gas emissions continue to rise, and without stronger mitigation efforts, the region will experience more heat, extreme heat, flood, storms, and infectious disease. Just 9 years after adoption of Paris Agreement on climate change, inaction has put the 1.5 degrees Celsius ambition nearly out of reach. Exceeding this target could significantly increase the risk of overshooting tipping points, leading to even more harmful impacts and related losses and damages. So the report says that the region generated about half of global GHG, that is greenhouse gas emissions in 2021, surpassing many historically high emitters. So the report says that the increase over past two decades have been driven by rising domestic consumption energy demand. So the China accounted for 2/3 of increase, while South Asia contributed 19.3% and Southeast Asia 15.4%. So the energy sector is the largest contributor to region's greenhouse gas emissions, that is nearly 77.6%, primarily due to heavy reliance on fossil fuels. The report also states that developing Asia has taken steps for decarbonization, but more ambitious mitigation action is necessary to slow the global climate change. So the report also says that the region is well positioned to benefit from global transition to net zero. So with substantial renewable energy generation potential, the region can produce some of the world's cheapest renewable electricity, helping to reduce carbon intensity in industry and energy sectors. It's fast growing and innovative economies, large workforce, high quality technical education, and a strong manufacturing base provide an opportunity to develop and supply the technology need for global decarbonization. So the report also says that the ADB Climate Change Perception Survey, which is conducted in 2024, finds that 91% of people in 14 economies, of course we have seen this earlier, it has a serious problem, and the temperature rises over inhabited land areas will exceed the global averages, and increase will be concentrated in certain seasons and subregions. So the heat waves will dramatically increase under high-end emission scenario, with average of about 35 degree Celsius increasing by several times by 2100. So the rainfall will be more concentrated, with peak daily perception increasing from 30 to 50% by 2100. Even as drought becomes more frequent, around 300 million people in the region could be threatened by coastal inundation in the event of sea ice instability. So the sea level rise will increasingly put coastal assets and population at risk. The flood losses will dramatically rise under climate change. So the ADB model suggests that around 1 trillion of annual flood damage could occur by 2070. The climate change can reduce gross domestic product, which we have seen earlier. They say that it will particularly affect Bangladesh and Pacific Island countries with extensive coastal population, particularly Vietnam. If more complex interaction effects are considered, the losses could be much higher. Extrapolation of patterns of loss relative to warming suggests that losses could reach 41% by 2100. So the market reforms can help to enable adaptive capacity. They say that some of policies would help to mitigate the climate risk factors. So the report also says that there is a need for accelerated climate action. So the climate related events such as extreme heat, droughts, devastating floods and storms, and the spread of infectious diseases are already affecting billions of people around the world. So they also says that since 1995, successive global summits and agreements, most prominently the 2015 Paris Agreement on climate change, have called for action to decarbonize the world's economies. But yet in 2023, greenhouse gas emissions were still rising and global warming continues to accelerate. So the first global stocktake of climate action under the Paris Agreement, conducted at 28th Conference of Parties, that is COP28, to United Nations Framework Convention on Climate Change in November 2023, found a glaring gap in emissions reduction commitments and actions, with the reviewers concluding that the world is significantly off the track in meeting Paris Agreement targets. So the parties to Paris Agreement agreed to limit average global temperature rise well below 2 degrees Celsius above pre-industrial levels and aim for 1.5 degrees Celsius. By 2023, the 1.5 degrees Celsius target had almost been exceeded, as average temperature soared to 1.46 degrees Celsius above pre-industrial averages. That is like below 2 degrees Celsius, right? Unless more ambitious and large-scale mitigation action is taken urgently, the world risks overshooting critical tipping points with the disastrous consequence. The report also says that the carbon intensity is declining steeply only in some parts of Asia, and is always declines as economies move to be more dominated by services. Developing Asia invests more in renewable energy than any other region in the world and currently hosts more than 50% of world's solar and wind generation capacity. So the 44 economies in the region have submitted nationally determined contribution, that is NDCs, to UNFCCs, and many have adopted net zero targets. Yet the emission continue to rise from the region, and achieving net zero targets within the century will require large investment and transformative changes. So the report also states that involving 13,500 residents in 14 Asian economies, 91% of respondents identified climate change as a serious problem, which of course we have seen that earlier. The awareness of government policies and pledges to address the climate change has varied. It was relatively high in China, Singapore and Vietnam, but notably lower in Pakistan, Sri Lanka and Thailand. The most respondents supported mitigation and adaptation measures, especially investment in low emission and resilient infrastructure and flood protection. So they say that the report also says that developing Asia is well positioned to seize opportunities from climate action.